up in the Referral Mortgages office.
I'm coming, baby. I'm coming.
If you look to your top right of your screen, you'll notice that there's some new artwork in here.
What are those feature sheets?
Real mortgages, real fast, made simple. Paul Stevenson.
What's up, everybody? So, first and foremost, we're going to have four of us chatting today. Myself, Greg, Vito, obviously, and my business partner, David Warren, who is a legend of Ottawa financing, or quickly becoming one. We are very excited, though, to announce a partnership that we have with a local business here, the best burgers in the city, Burgers and Fries Forever, BFF. So they are going to be the official sponsor of the Friday Wrap-Up. So all you guys got to do, they're basically going to give away dinner for two every single week to our viewers. All you have to do is tag your two BFFs in the comments and ask any question. You want to know what Greg's middle name is? You want to know what the down payment is on a $300,000 house? Ask anything. We'll tell you, and you'll instantly qualify for dinner for two at BFF on Dalhousie. So thanks to Jamil Bouya, it's my boy. He hooked us up with that partnership, that sponsorship, and we're really excited. So tag your friends, tag your two BFFs, ask a question, and we'll be announcing the winner Friday morning next week.
I feel like I should. I'm going to bring my camera to
my people missed that. Tag two friends, and you're entered into a draw to win 2 free meals at BFF Burgers Fries Forever on Dalhousie. Your boy.
Well said.
Very
impressive. There.
Yeah.
Amazing burgers.
You guys look great.
Jamal. Thank you, Jamal, for the hookup.
Yeah, and shout outs to Robbie as well. He did the wall this week, and we're really happy with that. So
Wall looks good.
It's like really coming together here over here. You know?
We have a kitchen now. We got the wall painted. I mean, it's almost like an office.
I'm not going to lie, I like coming here.
Yeah.
I like being here every Friday morning, even though it took me 45 minutes to get in.
Yeah, no. Well, we're in spring now. Nice winter snowfall in spring.
Yeah. I'm done with winter.
This coffee's smelling mighty fine, boys.
Yeah, go on.
I feel like I should go make one while you start talking.
Sure. So we actually one thing
we're all about fun.
I want to start off by talking about a funky deal we had this week for a client looking to buy a church. So it is possible. There's nothing, if you have a building and you want to buy it, we'll find a way to get the money for it. But it's just one of those outside the box things you don't hear. Like, you see churches, but you don't think of people buying them or building them or whatever, you know. So we're working through it though, and it's looking good. So
I didn't really know churches were privately owned, to be honest. I thought like it was owned by by like a community or like, you know.
Yeah, there's parishioners, I guess, that everyone like kind of contributes to, like. They're not all for profit, right?
Who owns my Catholic church on Fisher? Who owns that church?
That'd likely be the archdiocese.
Yeah.
The what?
Like it'd be the archdiocese, like that congregation. Like they would make up they'd have like a not-for-profit like corporation that would likely own it.
And I think
it would
be
be
under
under
denomination.
like it could be like the Ottawa Archdiocese for that. Anyway.
So
either way, we're getting off topic.
Yeah,
Go to your bank and ask them about buying a church. Let's see what they say about that.
So how was your week? Let's just we have a few feature sheets we're going to talk about specifically with some open houses.
My week was reasonable. We've been at home. We've had a little bit of the flu, so today is actually I think the first day in the week that I felt 1,000%. That's great. So I'm excited about that. Got a new listing coming out in Orleans, right off 10th line. Backs onto where the Good Life is, and it's great value. It's exclusive right now. $300K, under $300K for a 3-bedroom detached family home.
Wow.
So little bit of work needs to be done, but the average sales price of similar homes is $345,000. So hey.
Not much work to be done. Good value there.
Really good value. So
there's a few of those in Orleans.
PM me.
Yeah. When you
PM
say exclusive,
if you want some more information about that one.
Is that all?
PM?
When you say exclusive, like exclusive.
It's exclusive right now. We're going MLS on the 29th. Exclusive means we just got it on the market. She's getting it ready to sell. If anyone is interested, we'll let them in beforehand.
Okay.
You know.
I have a question, because I know realtors are all about their stats, right?
Yeah.
How many days it's on the market. So is this one of those, loop arounds to like...
Is it officially not on the market right now?
Basically make your stats better. Once it hits the market, it technically was already...
You know what? That's interesting. I've never thought of that until you just said that.
Okay.
I've never thought of it.
Like how long can you keep it exclusive?
I imagine people do. You can keep it exclusive as long as you want.
Right. It's just the exposure, I guess, you get on it.
Yeah. Well, that's exactly it. It's the exposure. So you just kind of hope that you'll generate traffic, sell it, maybe sell it on their own. Some sellers might have their own reasons. They don't want to be public. They want you to find the buyer.
So that's a good question. So if people come to you, like you have exclusive listings, John Smith has exclusive listings, Sally, Johnny has exclusive. So if someone comes to you, what are they seeing as far as properties that are visible? Are they seeing just properties that you have? Are they seeing every property in the city? Explain to people, I guess, when they come to you, what you're actually, how you're going to put them on a search, how you're going to actually find them their home.
If someone wants to see only exclusive listings?
No, but I'm saying you have exclusive listings.
Right.
So if they come to you, they're going to get your exclusive listings. If they go to Dave, they're going to get Dave's exclusive.
Very good
so
question. Very good question.
Yeah. What are they
so,
seeing?
I mean, obviously they're seeing what's on the MLS, what I'm sending them. Working with a realtor has the advantage of we get everything that comes out 24 hours before it hits realtor.ca. But then again, there's also a lot of buyers that are already on that search for other realtors in the city, right? So it's not saying that they're the only ones that are getting that. But with exclusives, it's like if we speak with someone and they have a certain type of property that they want, then what I would do, and I mean, not everybody has this capacity, not all agents have this capacity. We tap into our networks, whether it's private Facebook groups, whether it's just the realtors that you work with, whether you know some that work in a specific area that they want, because almost always you'll be able to find something that's exclusive and not on the market yet that may work for your client. It's at least worth a shot. It doesn't happen all the time, but it's possible.
Does your client, when you're trying to make the sale to win the client over to list their home, are they asking about this? Are they worried? So I had a client reach out to me asking my opinion on going with a certain realtor and if they're going to be aggressive enough, Right. And I'm obviously going to vouch for this realtor because he's my boy, and I think he is aggressive enough, right? You know who if he's watching, he knows who we're talking about. Anyways, I'm just curious, at the end of the day, she has this marketable property. I wanted to say, listen, I could recommend 5 realtors. They're going to all sell your home at pretty much asking price. Like it's going to be
great location,
great value, great condition. It's fairly new, 2010 build. It's in Canada. Like it's a no-brainer. It's going to sell, And but she, So how do you combat that? How are you aggressive enough? What's your exclusive situation like? Is your network big enough? How do you prove that you're worthy of that client?
It's just asking questions and getting the answer. Sometimes it can be, if it's a personal thing, you can say to them, just like, well, have I done this for you? Have I shown you that I can do this? Why would you want to go somewhere, like whatever? Just ask questions, and if they basically can't say no to anything,
right,
then you're the guy for the job. And that, sorry.
No, I was going to say, so also, there's a lot, I've seen an increase of people selling on their own too. So with your clients, will you still show them people like for sale by owner properties, if that's, or do you wait for them to kind of propose that property? Because I know a lot of realtors, they kind of avoid that, right?
I don't look for it at first, unless, see, the thing is this too, there's all the mirror postings now, so most for sale by owners are actually on MLS, so we do see them. So if it's the right property, of course I'll show them. And then if we're out of options based on MLS listings, then I'll start going to the actual sites, because there are a few that may not be on the realtor.ca or MLS.
Do you find it much harder dealing with the for sale by owners, like either from a pricing standpoint, from the listing, or from a negotiation? I know that can be an issue sometimes.
It can be, but usually you can get it done. Yeah. I've always gotten them done. I've never
dealt a deal to be made.
I've never dealt with one that's unreasonable.
Yeah.
If there's, you make it happen.
Yeah.
If your buyer, if they want the property, the seller wants to sell, you want to complete the transaction, like you just figure it out.
I thought there was this, common boycott amongst realtors to not take their clients to these for sale by owner properties.
I think, I can't speak for myself. I think maybe there is among some other realtors, and I think years ago that was more of a common thing. It was kind of like, no, forget that, we're not going to deal with those guys. But I think now it's just like, they're there, what can you do?
So for people selling on their own, like aside from, I know they obviously, your statistics showing that they do stay on the market longer, obviously, than using a professional. But a lot of them won't list, like they will not put realtors welcome, right? So for you guys, is that like they're kind of almost setting that up themselves too, right? By saying that.
They are, and usually if you don't see, like if it's realtors welcome, it'll say realtors welcome at a certain commission generally. If you go in and then the price is low, whatever, even if you show the comparables and stuff and you show your house is actually worth this, they might say, okay, well now I'll work with you at this commission.
Right.
So then it's up to you to decide if you and your client to decide like if that's reasonable and if you can put it together, right?
Yeah.
Generally you will. Like, I mean, I'm sure some people walk away for whatever reason. I mean, I'm not saying that I've never walked away from anything like that when it's just, totally outlandish and not possible.
Oh, my comment in post.
Oh, right. Comments. We
Man.
forgot about comments.
Yeah, Vito, check the other two phones out.
I'm gonna check.
So I want to get into actually speaking of listings. We did an open house this past Sunday for a property out in Orleans that you had, and I wanted to kind of go. We have 3 different listings that Greg has available right now, all different price ranges, and we kind of want to just go over, I guess, kind of what's required as far as down payment again, what it would cost you on a monthly basis to own these properties, and then one of the most valuable things I think about these kind of feature sheets is the actual income that's needed. So for people coming through the open house, like how valuable is that for buyers to have?
And it was huge.
Yeah.
With the first people that we had through.
Yeah, first people that came through at this open house was at 540 Parasol in Orleans. And they came through and they specifically said, like, we're buying this as an investment property. They had a lot of questions around the financing, which again, normally you would have not been able to answer, or at least you would have probably directed them to us anyways. But having these sheets where it actually shows based on what their down payment is. So I mean, we already had the 20%, so they could see right away, like, okay, this is how much it's going to cost us. At 20% down, it's about $46,000. So they knew right away their down payment. They knew what the income they needed was based on that down payment, and then they knew what their monthly costs were. So in this case, it was $1,104. So for them, they're thinking, okay, we look at this property, they can instantly do their numbers on the spot. We're going to get $1,350, $1,400 for the spot. They know the mortgage is going to be $1,100, so they're already thinking like this is a good buy now, right? So it kind of puts them in a better position. I know Vito has a couple others there. They're a little higher. So this price point was $229. So again, first-time home buyer. This is a perfect home for them in Orleans. It's a great starter home. It's an end unit. So I mean, it's a really well-priced home. Some of the other ones we have here. What's that on there?
So Greg, so if we have a dual income. Family income situation, maybe total household of about 140, okay? Minimal debts, so 140K, minimal debts. Greg here has a fantastic, beautiful listing on Tullamore.
Yeah.
561 Tullamore, going for 660. Where is that? That's in Gloucester?
It's in Greeley.
In Greeley.
Yeah. Well, Riverside South of Greeley.
So let's say you put 5% down on 660. You're looking at about what?
So explain the down payment. So usually the minimum down payment is 5%.
Yeah.
But maybe you can explain, like once it goes over $500,000, then the rules, the qualification kind of changes.
Right.
So Dave, I don't know if you want to.
Yeah,
Silence
sure.
over there.
Up to 500,000, it's 5% down, and anything over 500,000 then increases to 10% down for that amount over the 500. So you'd be able to do 5% up to 500,000 on any purchase. But if the price is 600,000, it would be 10% on that additional 100,000.
So in this case, in Greeley, it's going for 660. It's going to be 5% up to the first 500, and then 10% on the following 160,000. That was a change made last year, right?
So that's something to keep in mind when you guys are shopping as well. Is that there have been multiple rule changes over the last year and a half, and to be cognizant of that. When you're thinking of purchase prices or prices of homes, when you're looking that it's not just straight 5% or anything like that. Just to kind of keep in mind. And further to on another one of these listings, that that sliding scale does factor in as well.
It's pretty amazing. I mean, if you're a couple living right now renting and you each make about 65,000, you're in that 650,000 purchase range, which is pretty cool.
You were talking about average income, weren't you? Not what were you saying the average income was, or what were you saying your
median
total
income is about 87,000.
Yeah, 87. So if you have two people at 87, I mean that's the thing is, you really want to. We always pre-approve clients, and when we pre-approve them, we always say this is your ceiling. Like you can buy up to 700,000, let's say, but it's very important that not just for the 700,000, you want to make sure that the payment monthly is what you're looking for. So in that case, Matt, what's the monthly payment on 5% down?
5% down on this guy is $2,900.
$2,900. So if you're paying rent right now at say $2,200 downtown or something like that, you want to figure out from a financial standpoint, a budgeting standpoint, how much you are actually willing to pay for your housing expenses. And the rule of thumb, what banks usually use is around 40%, right? 40% of your gross income annually for all of your debts. So I think for housing, it's what, 20%? You want roughly between 18 and 20% of your gross income should be dedicated to your housing and your shelter. So in this case, $2,900, depending on what you're comfortable paying, that might even be too much. So you might be looking at this home, but when you see that payment, you're like, well, we really are more comfortable paying $2,400 as we are now, which then obviously translates to a lower purchase price. So you might want to be
or
buying
a higher
5.
down payment, because
Right.
at 20% down on that property, you're at $2,388.
There you go.
As your mortgage payment. So, purchase price or increased down payment, coming up with 20% on $600,000 is a little difficult. You're looking at $132,000. So not everybody has that sitting in their savings account.
No, but if you're selling your first home, like if you were to buy that original home we talked about, and you'd held it for, let's say, 10, 15 years, and now you're ready, you have your family, you're growing, you want to move into another home, you might have that $130,000 equity. So as Matt said, you only need to put 5% down. But if you're putting 20, then it brings the payments to where you're comfortable with at $2,300. And also you're going to avoid CMHC at that point too, right? So you're not going to have to pay any increased insurance premium, which then also increases your monthly payment because of additional insurance premium.
Yeah, on a home with 660, you're saving about $15,000 to $25,000 on CMHC if you put 20% down, which is quite significant on your mortgage amount. That's also why the mortgage payment is that much less, because you're reducing your loan amount by $15,000 to $25,000, depending on how much lower the loan 20% you're putting down.
So the last one we have here is actually 30 Blue Heron Court, which is Rockcliffe, correct? Mm-hmm. Beautiful area here in Ottawa, for anyone who knows Ottawa well. This is definitely in the higher price point. This one's listed at $1.2 million. So, we'll talk minimum down payment on this, even at, it's 20%. It's showing 20% as the minimum. So it would be $240,000 across the board. Can you explain that, Dave? Why?
The max you can go to with any insured would be $1 million as a purchase price. So that's why over $1 million, again, that sliding scale comes into play, where it's going to be a minimum of 20% down. And even at that, some lenders will do 20%, and then for any dollar over $1 million or over 1.2, some have different products or different stipulations that it'll be 50% even down over that $1 million. Some will maintain it at 20. So it's really important to not only look at necessarily the one bank you're talking to that might have maybe a 50% sliding scale, but there are others out there that will maintain it at 20. So it's certainly important.
I feel like sliding scale is a little jargon here, Dave.
Yeah. So same aspect as the 500,000 example earlier. Anything up to $1 million would be 20% down, and then over that, for any dollar over it, so if it was 1.1, that 100,000, it would be a 50% down payment. So it would be 50,000 required on that 100,000, and some, they all vary.
Vito's phone just broke.
You gotta have it on private mode there, bud.
Cote.
You're not disturbed. Cote's breaking
Cote, you're breaking phones, bud.
This is, there's something to say about this. The whole 20% down minimum on $1 million. I mean, that makes sense to me. Like, that's just like, why would you buy $1 million house if you can't afford the 20% down?
Yeah, if you're nudging 5%,
it seems ridiculous, right?
Yeah.
I think that's a great rule and regulation to have in effect, because people can overspend and then they end up losing the house or something.
For sure. I mean, at that point, there's
That's a good
not.
point.
I mean, for the banks as well, they're not a property that sells frequently,
Mm-hmm.
and there's not. It's a very small segment of buyers that are looking for them, so they want to know that, if at 20%, perfect. If we have to take this house back, that there's some room that we can make payments over.
Right.
It might take
Right.
6 months
Right.
Because they don't move as quick. Yeah,
because
that's it.
there's so few buyers for it. So that's why they require the higher down payment in that respect.
So in this case, based on the going rate right now, the down payment would be $240,000 as a minimum. Mortgage amount would then be $960. So a mortgage payment on that, without property tax or anything, would be about $4,300. Property tax would be about $1,200 a month, so almost similar to a mortgage payment on the original $250,000. And on a monthly basis, you're looking at just under $6,000 as far as the carrying cost. So income, again, it's obviously up there, but $212. So as a family income, if you're both making 6 figures, is obviously the price range you're looking at on the higher scale. I mean, not everyone's buying $1.2 million homes, right? Unless you live in Rockcliffe. And then
We'll call that our specialty listing. Eh?
yeah, that's the not exclusive.
Specialty.
So that's Greg's buy now listing.
Yeah,
Buy
That's the
today.
hot buy.
Call me. I'll hook you up.
Hot buy in Rockcliffe right now.
Yeah.
Not exclusive. That's exclusive for sure.
At the Trudeau family is
No,
your
that
neighbors.
one's loud.
Well, that one's client exclusive. In the sense
Oh,
that
yeah,
there's very
exclusive
limited
to
people
who's.
that-
Oh,
Yeah,
absolutely,
yeah.
100%.
One thing I wanted to talk about too, off track from that, but getting into it, I've been meeting with a lot of family law firms recently, and we
Yes,
talked about
yeah.
this program. So there is a lot. I don't know why. I mean, it must be something in the water here in Ottawa, but it feels like there is a lot of people currently struggling through separations, divorces, things like that. I read a stat the other day said that divorces are up to 64%, which is ridiculous.
In Ottawa or
64%?
Canada?
So this is, I believe,
North America.
No, I would say North America.
Okay.
I don't know. I couldn't tell you the actual
Or the
demographics. Yeah, in downtown Ottawa. Yeah. But just knowing that, I mean, there's a lot of people that are looking for
That's
additional
crazy.
advice that are homeowners.
That is crazy.
So we actually have a program through one of our lenders, few of our lenders, and what they do is they'll actually allow clients to refinance their home up to 95% of the value if they're going through a separation or a divorce.
Now, one thing to keep in mind, to be cognizant or aware of, is that they'll go up to 95% to pay out debts or anything that's in that separation agreement. So the banks will look for, you know, what mortgage is being paid out, what debts, whether it's to each party or matrimonial debts. As long as it's outlined in that separation agreement, they'll allow you to go up to 95% of value in order to pay those out.
They don't want you to just walk away with cash in the pocket.
No, I mean, it could be, if it's
It could be a
outlined in
buy,
the separation
yeah.
agreement that a party is taking cash, the other party that's not seeing the property is to be paid out as well, then that could be good, but it has to be outlined and detailed in that separation agreement. So that's something to be aware
So
of.
if you want to
Make
keep
sure.
your home, you know, you don't want to sell your home, you can keep it and kind of rebuy it.
So just to
Like at 5%.
rewind a little bit, just so people know, when you buy your home, you need a minimum of 5% down, but when you're trying to refinance it, or if you've lived in it for a while and you're trying to access some of your equity in the home, the maximum they will let you refinance up to is 80% of the value. So when you're buying, you're basically borrowing up to 95%, but when you're trying to refinance it, you can only go up to 80%. So that's why this program is so valuable, because a lot of people, if they're in their first, let's say, 10 years of marriage or of living in this home, a lot of the times they don't have much equity built up. They might only have 15% equity built up. So if they were trying to refinance, they'd literally have access to $0. So through this program, they would at least have access to that 10%, which would then allow them to potentially stay in the home. You know, if you have kids and things like that, the divorce and separation is going to be difficult enough that being able to give them the kind of comfort of staying in that home, in the matrimonial home, is hugely valuable, right? And it eases a lot of stress, because a lot of that divorce and separation, for anyone that's gone through it, a lot of it is, it's a financial pinch, right? Like there's a lot of expenses just with restarting your life in that sense. There's a lot of expenses that you aren't aware of. So having that additional access to equity, to funds, and not having to sell the home to get it can be hugely valuable. So from your standpoint, I mean, the other thing that it can do, if people do have a bit of equity, let's say they're at 75% of the value of their home on their mortgage, that additional 20% could be used to give to their spouse who's moving out for their down payment.
Mm-hmm.
So then it allows
It's like a buyout.
Yeah, it's like a buyout. So the exiting spouse says, okay, now I can access some of this equity that we've built, and I can now start my life over and buy a new home.
Without having
there's-
to wait the lengthy period to maybe sell the house
Right.
and close on it and that sort of thing. It's, kind of allows for that.
And refinances are instant. Like if we started one today, I mean, you have the money within potentially 2 to 3 weeks. Like they're quick turnarounds. So have you run into clients that have had to sell because of that?
Yeah,
or-
well, I'm dealing with something right now where she doesn't want to stay in the house, he doesn't want to stay in the house, so they have to. I mean, they're
Yes,
selling it
yeah.
because neither of them could really afford to keep it anyways, right?
Mhm.
So that's kind of a sad situation because it's just
Way to bring us down, Greg.
taking a longer time. No, but I'm just saying those are the different
No.
scenarios. Not everybody wants to do it, but I mean it's a great option, especially
Yeah.
like you're saying, like to have, especially if you have family involved, to have them stay in the home they were raised in, basically.
Yeah, so as Dave said, the only things that are required to qualify for that program are a separation or divorce agreement, right? A finalized separation and divorce agreement, and a private sale. Is that correct?
And the party that would be staying in the property would have to qualify for that mortgage as well, though. So
Right.
that
Yeah.
individual, they would need to qualify from a debt to income ratio standpoint. But so saying that is all fine, then it would just be kind of the regular documents for income, and then that separation agreement. Which,
Yeah. So for that, we were actually, and the reason why I brought this up is because I do deal with we deal with a lot of different law firms in the city, but a lot of the family law lawyers in the city had no idea about this program, which I thought was really eye-opening because, you know, they're dealing day in and day out with people that are homeowners, that are going through separations, going through divorces, and the fact that they're not aware that this is out there, I mean, I can only think of how many families could have benefited from this program, you know, so for anyone that knows any family law lawyers that you could refer to us to even just have the discussion, we do have some one-pagers that we can provide to them so that they can give it to their clients, just giving them some more information on how the program works. So definitely either tag them in the video or just send me a private message or email us and let us know who they are, and we'll be more than happy. I've been spending a lot of time kind of educating some of the lawyers in the city here about this program because I just think that it's inevitable that there's going to be people that need it. And if you don't know what you don't know, then it's kind of hard to tell them out, right? So
No, it's better to be informed, obviously.
yeah.
I'm gonna say I'm gonna look into the wrap up discussion here.
Yeah.
I woke up today pretty pissed off about this snow, and I'm wondering. So you have a couple exclusive listings right now. I mean, is this like a damper? Like this weekend, there's gonna be open houses. Is this like a
you know what, man?
damper?
I'll tell you something that happened last year. So last year the market was like January, February. It was just kind of like this because remember it was cold, but there wasn't as much snow.
Yeah, it was green. It was a green.
It was green, and then everybody got amped up to list because it seemed like it was over. And then I guess the last week of February or whatever, we just got dumped on, and then it was dead. It was dead for like 3 or 4 weeks. There was nothing happening. Everybody was like, what's going on? And then as soon as it was done, so this was like the beginning of April, it just went crazy. So the thing now is that we've had the best January, February ever in Ottawa, and March it's still the same thing. Like I see all the conditional sales daily, it's nuts. But I mean, does this put a damper on it? I think it does for some people. At the same time,
if you're a shark, this is the time to go and.
Well, I mean,
blood in the water.
Put it this way: if you are an agent and you're out showing homes and your clients still want to go in this weather, then maybe it is a good idea to go because there won't be as many people looking over the weekend, right? They'll be doing something else.
There's no question though, like we're coming into now our 4th spring, and every year, like the second it hits above 0 and the snow starts melting, people start thinking patios, pools, entertaining, like, oh, we gotta up our house game, right? It's like, it always gets busy. So so I don't know if you guys have any closing remarks. I feel like
I don't know, maybe remind everybody about the BFF.
Yeah, so anyone that tuned in after the beginning, we do have an official sponsor now for the wrap-up. So shout outs to Jamil Bouya. He's a really close friend of Referral and the Greater Ottawa Group. So he's one of the owners of Burgers and Fries Forever on Dalhousie. They also have another location on Bank Street. The new location on Dalhousie is incredible if you haven't been. It's right across from the Freeform Fitness and the Subway. So basically anyone that's watching this video, all you have to do is tag 2 BFFs in the comments and ask any question you want. So it could be, as I said, you know, what's Dave's underwear color? What's Matt eating for dinner tonight? It doesn't matter. Obviously, the goal is to have it real estate related, but just ask a question, get connected with us, and you'll automatically qualify. Dinner for 2 for BFF. We're going to give one of those away every week, and we'll be announcing the winner next Friday. So you have 24 hours. Tag you 2 BFFs and make a comment.
And we got one more thing going on this Sunday. Antoinette's brother Camille has started this thing 7 years ago in honor of their great aunt Naja that passed away 7 years ago. This is the 7th annual Sunshine Poker Tournament, raising money for Auxilia and for the Ottawa Hospital Foundation. And it's a poker tournament they've raised $70,000 over the last 7 years on their own. It's a big deal. It's going on this Sunday. I'm going to post up a little interview I did with Camille yesterday on my page right after this.
I shared it on my Facebook.
Shared.
Check it out.
Vito shared. We're all sharing here, the community.
Sharing.
It's a good story in Ottawa. Definitely made me feel good to watch it. You know, my mom shared it too. She liked it. Yeah.
Vito's mom is a legend for anyone that doesn't know.
Mom, you're a legend.
Sam, why don't you come in here? Let's introduce Sam. She's our new office manager, newest part of the team here.
Sammy.
So Sam is a former entrepreneur as well, and she's been a game changer for our team. So Sam, just come at least give him a wave here, let him know.
Hi.
introduce yourself. Sam actually drove in from Carleton Place today, so she is
Familiar with the weather?
she's familiar with the weather. So next time you guys are around, yeah, come
Do you
by.
need a passport to go to Carlton Place?
No, it's not that far away. It's normally very, very close.
So tell us your background, Sam. What was your former business? Because I'm sure a lot of people actually know of it.
I used to own Official Princess Parties, which was a kids entertainment company that operated all throughout Ontario. Unfortunately, my business partner left as she decided to do other things with her life. So now I'm here doing this.
And we're very happy. She's an all-star. So next time you guys are around, pop in, say hi to Sam. We're here obviously Monday to Friday, sometimes on weekends, a lot of the times on weekends.
Like us on Facebook.
Yeah, make sure to like us on Facebook, follow GOG, follow Referral. We're going to do this every Friday, so be sure to tune in. And as we said, tag 2BFFs, make a comment, and win some dinner. All right?
Amazing
Woo!
dinner. All right.
Wrap up!
Everybody.
Have a good weekend!
Drive safe.